Stablecoins have become the backbone of cross-border transactions, settlement, and on-chain liquidity. The global stablecoin market now exceeds $307 billion in capitalization, and in 2025, stablecoin transaction volume crossed $33 trillion, more than Visa and Mastercard combined. But under European law, the regulatory picture has just become much clearer and much stricter. Hello, my name is Mateusz Bartoszewicz and I'm the MiCA Delivery Manager at RE10. Welcome to the final episode of MiCA, Made Practical. We've spent this series looking at practical business use cases. Today, we are closing with a regulatory episode, because the rules around stablecoins are shifting in a way that every operator needs to understand. Let's start with the basics. Under MiCA, stablecoins fall into two defined categories: e-money tokens, or EMTs, tokens pegged one-to-one to a single official currency, like a digital euro or digital dollar, and asset reference tokens, or ARTs, tokens that reference a basket of currencies, commodities, or other assets. For both categories, MiCA sets out detailed requirements. Issuers must be authorized. Reserves must be fully backed, segregated, and held in safe, liquid, low-risk assets. Holders have a right of redemption at par value. Regular audits and disclosures are required. Supervision is consistent across the EU, and the largest stablecoins can be classified as significant and placed under direct EBA supervision with heightened capital and liquidity requirements. That much has been clear since MiCA. What has changed is the regulatory interpretation of what a stablecoin actually is from a legal standpoint. The European Banking Authority has issued guidance clarifying the fiat-pegged stablecoins, EMTs, under MiCA, are in legal terms electronic money. Electronic money is a concept that already exists in EU law under the Electronic Money Directive. Electronic money can only be issued by authorized electronic money institutions, EMIs, or by credit institutions. The practical consequence is significant. Under the EBA's interpretation, to issue or operate a fiat-pegged stablecoin in the EU, a firm needs two regulatory permissions, not one. It needs MiCA authorization because it is offering a crypto asset service, and it needs EMI authorization because it is issuing or handling electronic money. One license is not enough. Both are required. This raises the bar considerably. MiCA authorization alone is already a serious undertaking. Capital requirements, governance, operational resilience, disclosures. Adding EMI authorization means safeguarding of client funds, own funds requirements under the Electronic Money Directive, and supervision under the banking regulatory framework. We have already seen what this looks like in practice. Circle, the issuer of USDC and EURC, secured EMI authorization from the French regulator ACPR in 2024 and became the first major global stablecoin issuer to operate in a model aligned with MiCA. Tether, the issuer of USDT, did not pursue the equivalent authorization, and as a result, regulated European platforms have been systematically delisting USDT from trading for European users. One of the largest stablecoins in the world, by volume, is no longer available on compliant EU venues. For issuers, this dual license model is the new baseline. For operators, firms that distribute, transfer, or provide services around stablecoins, the analysis depends on the specific activity, but the direction is the same. The regulatory perimeter is tightening, and the standard is moving closer to traditional financial services supervision. What does this mean in practice? First, expect the European stablecoin market to consolidate around a smaller number of issuers who can meet both MiCA and EMI requirements. Several major global stablecoins are already restructuring, partnering with licensed entities, or stepping back from the EU. Second, expect a rapid rise of euro-denominated stablecoins. EURC from Circle leads the segment, followed by Stasis Euro and Euro convertible from Societe Generale Forge. A consortium of major European banks is preparing its own euro stablecoin. The European Central Bank has been explicit about the risk of digital dollarization if dollar-pegged stablecoins dominate European transaction flows. And the licensed euro stablecoin market is the direct response. S&P Global Ratings projects euro stablecoin capitalization could grow from around 650 million euros at the end of 2025 to roughly 1.1 trillion euros by 2030. Third, expect stronger guarantees for users. Full reserve backing, right of redemption at par, safeguarding requirements, supervisory oversight. For businesses using stablecoins for transactions or treasury, this is a positive. The instruments become more trustworthy, more auditable, and more integrated with the traditional financial system. Fourth, expect a widening gap between regulated and non-regulated infrastructure. Firms that rely on unlicensed stablecoin providers will face operational and legal risk. Firms that build on dual licensed infrastructure will have a clearer path to institutional adoption and, over time, will connect into the ECB's emerging digital euro framework as it comes online later this decade. Where does RE10 fit in this picture? RE10 operates under MiCA as a licensed crypto asset service provider through our holding group. Our role is to provide the regulated transaction, custody, and settlement layer that businesses and institutions can rely on. That means we already know the regulatory requirements and are exploring opportunities to deliver stablecoin integration into our services as quickly as possible for cross-border settlement, e-commerce acceptance, or treasury. We are committed to enabling our clients to benefit from stablecoin infrastructure without having to navigate the licensing landscape themselves. Once we've secured the necessary regulatory approvals, RE10 is positioned to adapt quickly, because our compliance framework was built for exactly this kind of evolving regulatory environment. 3 things to take away from this episode. 1. Fiat-pegged stablecoins in the EU are treated as electronic money under the EBA's interpretation, which means issuers need both a MiCA license and an EMI license. 2. The European stablecoin market is consolidating around dual-licensed issuers, with a clear shift toward regulated euro-denominated stablecoins and stronger protections for users. 3. If your business depends on stablecoin infrastructure, work with a licensed CASP that is actively tracking this regulatory shift and integrating only with compliant issuers. Reach out to our sales team at RE10 to see how our MiCA licensed transaction, custody, and settlement infrastructure can support your stablecoin use cases with the regulatory clarity your business needs. Thank you for watching MiCA, made practical. Across 6 episodes, we've covered crypto asset purchases and custody, cross-border transactions, e-commerce acceptance, property purchases, the July 1st MiCA market consolidation, and the regulatory reality of stablecoins. Each of these is a practical use case or structural shift that businesses and institutions are implementing today, with RE10 as the licensed CASP partner. We aim to provide comprehensive crypto asset solutions for B2B sector. If you want to explore any of these use cases for your business, visit re10.com or contact our sales team directly. Follow RE10 for weekly MiCA and crypto updates.